Hi everyone and welcome to propertygenie.co.nz. Today we have with us Lisa Dudson, co-owner of ifindproperty.co.nz, buyers agents and property finders. Today we want to discuss with you what is the difference and what do you recommend for property investors who got the dilemma between choosing principal and interest loans or interest-only loans. What is your take on that?
Yeah, it's an interesting topic because I think, my experience in the past is that when people look at going into property investment, they think that the only way to have their mortgages is to go interest only. And I don't necessarily agree with that, right? So a lot of people in the industry are quite steadfast about that, but I think it very much depends on your personal circumstances. So the key reasons that you go interest only are because you ideally want to pay off your own home first, because the interest on your own home is not tax deductible. The interest on your investment property mortgage is tax deductible. So in theory, from a financial perspective, you always want to pay off your non-deductible debt first, i.e. your own home. Okay? And a lot of people who go into investment properties do have their own home. So that's the first key reason why you go interest only. The second key reason is it improves your cash flow, because your costs of paying your mortgage are lower if you pay interest only than if you pay principal and interest. Okay, so that's the second key reason. However, where I pause with this about deciding whether we should go principal and interest or interest only is around what your end result is that you want. Okay, so let's just imagine that that you've got some spare money. Let's say you've got $1,000 extra a month. You've done a bit of a budget and you've got $1,000 extra a month. Now, where is the most likely place that you would spend that $1,000? For most people, it would end up on a holiday or a lot of frivolous stuff, because a lot of us waste our money, right? In a perfect world, we would pay off our own home, so we would be freehold on our own home a lot faster. But the reality is most of us just spend that extra money. So if you aren't that disciplined with money and you have some extra cash, and ideally you'd like to pay for your own home, but you know that it's just not going to happen for a variety of reasons, then I think it's a really good idea to go principal and interest, because what that does is that forces you to pay off your investment property down the track. So it's a good use of your money, because previously you would have otherwise wasted it. Okay. So, because in the long term, what we ideally want to be doing is getting into a position where we've actually paid off our rental properties. And if we pay off principal and interest, then we can actually get those paid off on the long term. And that puts us in a better financial position overall. Now, there's lots of different ways that you can actually pay off principal and interest on your rental properties without actually being restricted to a traditional P&I mortgage. But that's probably for another video, because it's quite an in-depth conversation. But I guess the key thing is, in summary of all of that, is that you've got to think about where you are today financially, what you're actually trying to achieve on the long term, and think about your own personal circumstances and what is going to be the most effective mortgage for you, whether it is principal and interest or interest only, because there are pros and cons of going down both paths.
Great. Thank you very much for your comment on that and your insight, Lisa.